Good morning, everybody. Christopher's Insurance with my Forex Made Ezee Online update for the 5th of November 2018. Morning, everybody. Okay, here in front of me is the matrix. So I've just pause the video if you can and just have a look to see if there's anything out here that really catches your eye. This is the most important part. Just look at the picture and see if there's any clear movement of color throughout the entire time frame, which will give you an idea of what you should be looking at. So a good example would be straight off the bat. Sound like the Australian New Zealand dollar. Commodity cross pair, you can see particularly red across the board. We've got to be wary about the weekly time frame here in terms of the 200 pair moving average and the daily in terms of the MACD. So there's clearly a slowdown here around that area. However, one to look at. US dollar Japanese yen is another to look at. Yes, there's a bit of a momentum issue intraday. However, as we progress into the start of a new week, hopefully the momentum will start to drive. So another one to look at. US dollar chief, another one. This intraday stuff here should change as we head into into the liquidity side of things. So let's have a look and see if we can keep that one on the chart as well. Euro pound, another one we could look at. The monthly, weekly are not great, but there again something to look at. Euro US dollar, another to look at. There are a number of them over here that are looking good. Some of them still have a problem with the long term compared to the intraday. You can clearly see there's a divide on some. They're here very messy through the midsection. There's clearly a divide, both the long term as well as the intraday side of things. So there, just trade with caution. Look to see if chief yen is absolutely shocking. Euro CAD is another that's all over the place. Euro New Zealand is another one with change both long term and short term. CAD's chief looking positive, another one to look at, but just keep an eye out on that momentum, the MACD. Clearly not there at the moment. Just wait for it just to unfold later as we get more volatility coming through. Euro yen looking rubbish. Euro chief looking rubbish. You get my picture. Okay, so yeah, look for clean color across the board to see if there's anything out there that really catches your eye. So what I'm going to do is I'm going to spend more time in my analysis looking at the four majors here on the hard left hand side. So let's have a look and start with those. So out with the euro, the monthly chart on a default template, and let's have a look to see how things have progressed. So we can see just by looking at a naked chart that we went through a very volatile period over here where we did see volume in the market, however not directionally. A lot of wicks, very small bodies, didn't give us any emphasis of continuation of trend in this case, which was a negative bias because we've come from a high point and we've been falling throughout 2018. The consolidation took place here at the 2007 support mechanism towards the end of last year. But if you draw that line further through, you'll see that 2015 represented resistance and 2016 as well. So clearly a major support and resistance level was here when we had all this hesitation. We were looking for selling sentiment. We need to see continuation of that selling sentiment. And last month's candle, the October candle, gave us that. So a nice bearish engulfing candle, closed low. Yes, it traded into the August low. Now what we want to see is that continuation. Have we seen it so far in November? No. The euro is actually corrected at this particular point. So here again, we're looking for that selling sentiment. So what we're going to be looking for throughout each week, which makes up this month, is for price then to continue low. So if I just dress the candle now, so let's get rid of all my analysis. Let's dress the candle with the Forex Made Ezee template. There you have it. So now you can clearly see that the 200 period moving average was the resistance mechanism at the start of the year. We went through a consolidation period. We had the breakout here in May and then the April extension low into the 50 period moving average, which was the previous support and resistance mechanism. And you can see price, rightly so, just doing absolutely nothing on that level. Now we have a bearish engulfing candle closed low on the October candle closed. And you can see the RSI is below the midline, price is trading below the 200 and the 50 period moving average. The MACD, fast line below the slow line, histograms below the midline, everything's telling us to sell. Great. So now I can draw a line in the sand at the low of the October candle, then drop down to my weekly time frame, and you'll see straight away that I need to get below this yellow line, which represents the 200 period moving average on the weekly time frame. Remember, as I mentioned to you, price doesn't do too well in terms of trend direction if you're trading between the moving averages. Ideally, we need the moving averages to both be above price resistor in this case, is what we need to see, or either it's a supporting role. Cannot trade it when price is trading between the moving averages because clearly there is no movement. Direction. Okay, so now you'll notice that price over here is testing the same level we saw here in August. Notice the RSI, however, the August one was low, but the current candle, the RSI is tracking slightly higher. So there's a sign of convergence, okay, which is a sign of a slowdown in the selling momentum. Okay, there again, if we are looking for continuation, rather get that close lower than the 200, and we should see the RSI falling back in line. However, if price fails to get below the 200 and the RSI still continues to climb, we could actually be seeing the signs of a potential retracement happening in the month of November. So keep an eye on that. Keep an eye on that RSI. The MACD, you can see all over the place over here as we went through this consolidation. However, here on the hot right edge, you can see that the MACD is fast line below the slow line, and the histograms are currently tracking below the midline. So that's a sign of negativity. There's a lot of negativity here. However, having said that, we still haven't closed lower than the consolidation. So the August low. Get below the August low and look for that continuation to unfold. There's clearly viable target levels to the downside if and when we get that physical closed low. If we don't, then there's clearly no opportunity for continuation, which means that there's more likely for a retracement within the consolidation. That has its own implications in terms of risk, heightened risk, because you can see the movement within this consolidation has not been directional, i.e. fluid movements between 2 points. It's all over the place. So know if you're trading the euro against US dollar within the consolidation, the risk goes up. Okay, so keep that in mind.